Well, yesterday, Interfor announced that it was leaving the Quebec market. While it might not be material for the stock, it is a sign of things that have been building in the background in a sector that has had to deal with a number of headwinds. Let's bring in Daryl Swetlishoff, head of research at Raymond James, for perspective. Daryl, thanks as always for being with us. So give us the backstory here and how Interfor sort of got to this point.
Well, I guess you kind of hit on the head when you opening comments there. Quebec has challenges in their forest industry, very similar to British Columbia. There's a shortage of wood fiber, both from natural causes. You know, you've heard of the fires they've suffered, those terrible fires over the last few years. You know, up to 25% of that land base has now been torched over the last few years. That leads to less wood available for these sawmills, and of course that boosts prices. You have a situation where there's too many sawmills chasing too few trees, essentially.
And they're going to take a charge as it relates to this. And I guess this doesn't even factor in some of the other issues, cross-border issues with respect to, you know, we're still talking about a softwood lumber duties. What's the latest on that? What kind of questions are you getting from investors about when this starts to really creep in?
Right. Well, we published a note a few weeks ago that talked about some of the supply reductions we've seen in North America. You know, in August, we saw the duties roughly doubling to 15%, for Canadians on average shipping to the U.S. You know, and that's been a big factor along with just the low lumber pricing environment that we've seen. You know, we estimate between 10 and 12% of North American capacity between announced curtailments and ghost capacity closures, unannounced shuts. That's pretty big for any commodity industry, about 12% of North America shut. Duties are set to double again by our estimates of August 2025. So they're going to be running on average 30%. We think there's more closures to come in Canada and more closures to come specifically in BC and Quebec.
So, I mean, we're listing off a litany of headwinds from fires to trade wars, closures, low prices. Is there any reason to get constructive on the sector?
Well, actually, there is, Amber. Yellow pine prices, southern yellow pine, the U.S. lumber price, it's up about 40% over the last 6 months from its lows in May. That's a big deal for producers like Interfor. They've diversified away from Canada. Roughly half their capacity down there is in the U.S. South now. We've seen those prices recover. It's a function of some of those closures. The closures don't immediately impact supply. It takes a while for mills to wind down, their working inventory of trees and lumber. And so we're starting to see that come through now. Prices are at a 10-month high. And, the stocks are very inexpensive. Stocks like Interfor trading at half book value. And, there's a seasonal tailwind here. We like to tell investors, buy Halloween, sell Super Bowl. We're starting to get into that buy Halloween trade. On 8 of the last 11 years, it's returned 25%. And lastly, I think you have Javed Misra coming on later today. He's our technical analyst. The technicals on the lumber stocks look very favorable, including Interfor, West Fraser.
Well, maybe, Daryl, you can call in and ask a question about it when the show gets underway at noon. So you mentioned Interfor as a way to play it. What are some other names that could get caught in this wheelhouse?
So we like Interfor. If you believe rate cuts are going to materialize and that'll flow through to lumber demand, Interfor has, they're a pure play lumber producer, so they have the most operating leverage. They also have financial leverage. They had, at the end of last quarter, almost $900 million in debt, so you get a double push there. If you're a little bit more pessimistic on rate cuts or how it flows through to lumber demand, stocks like Doman, West Fraser, we have strong buys on both of those companies. And, in the middle, Canfor looks pretty attractive, no debt, a lot of lumber exposure as well. We like them, as well as smaller play. Atlas Engineering is another kind of a smaller cap play, but very much tied to the Canadian housing market.
Before I let you go, we got to talk about these two devastating hurricanes, both Helene and Milton. As somebody who tracks the lumber sector, unfortunately, we've seen these weather events before. Do they move the needle on stocks in terms of the rebuild? Is this part of your thesis?
Not entirely. there's around 300,000 houses each year that in the U.S. on average that either become fully depreciated in one way or another. This accelerates that obviously, and it's more of a regional impact. In the near term, the impact will probably mostly in the forest. The ability to get trees out. So I think you'll see a bit of a bump in prices there from a supply point of view. The rebuild will be there, but it'll be a longer tail to that rebuild. Like I don't think it'll move the stocks in the near term.
Okay, Daryl, we'll talk to you on Market Call. Thanks so much for joining us. That's Daryl Swetlishoff.